Hey guys, welcome back to the channel. In this week's video, we're going to talk a little bit about the August real estate numbers for Greater Vancouver and the Fraser Valley, what sort of trends we're starting to see emerge. We're going to talk about what's happening with mortgages in the market as well, and how all of this affects Vancouver real estate prices moving forward. Real quick, if this is your first time to the channel, my name is Hassan. I'm a real estate agent in the Vancouver area, and I make educational real estate content to help you on your real estate journey. When I'm not making videos like this, I'm helping people just like you buy and sell real estate across the Lower Mainland. So if that sounds interesting to you, or you just want to chat about your real estate situation with me, you can book me for a free call in the Calendly link below and subscribe to this channel so you don't miss a future video. All right, so before I get into the real estate stats, I do obviously want to mention the Bank of Canada did what I'll call the expected. They cut rates yet again for the third consecutive time by 25 basis points. I say expected. There was some back and forth in the market in terms of whether they were going to cut by 25 basis points, whether they were going to be more aggressive with a 50 basis point cut. They went the safer route, even though many will tell you the data is suggesting that, this slowdown in the economy probably, needs or requires more of a catalyst when it comes to interest rates. But another rate cut, I won't get into so much about what this small rate cut is going to do for the real estate market. I do tend to talk about that in previous videos, so you can check those out. But long story short, not going to have a major impact on the market. September in general is a busier time, September, October, so we should see some heightened activity. And activity is what I want to talk about when we're looking back at August numbers. So when we look at the Greater Vancouver side, the activity way down. We're looking at 26% below 10-year average from a sales quantity perspective. Inventory up about 20% on that 10-year average. On the Fraser Valley side, even more inventory and even fewer sales. Sales down 30% over that 10-year average, and inventory about 26% above that 10-year average. So a lot of inventory, especially over there in the valley. I know year over year in the valley, inventory up about 37%. So, lots of inventory in the Fraser Valley, not as many sales happening. Greater Vancouver side is very interesting. We've done a lot of talk on my channel about, Vancouver condos and Burnaby condos, and how we have all these condo completions happening, and how, a bulk of that inventory centers around the condo market. And so naturally you would think that, okay, with inventory rising in the condo segment, with sales falling overall, you would think that sale prices would fall as well. I'm going to pull up a chart here. This is the median sale price for condos across Greater Vancouver. The reason I like to use the median number versus the average is it removes the outliers, the very high priced properties that sold and maybe the very low. Median will find you that middle number. And you can see we're right at $720,000 for the median sale price for condos. And that's the exact same that we had the prior month in July. So you see a bit of a leveling out. And if you look at this chart, it's a 5-year chart. You're going to see that we're not so far off the pandemic highs. The strength and the resiliency in that condo market to maintain, I say maintain with in quotation marks, because there has of course been some up and down, but fairly steady. And now we've had kind of this steadying pattern for a few months here. The question becomes, have we now hit a bottom? Have we hit another plateau for these condos? If we look at total inventory, as I mentioned off the top, total inventory is definitely higher. But are we going to start seeing that now trend downwards? It's all about, how many properties are going to hit the market. And in the past, you would say, okay, more properties hit the market, fewer activity, prices are coming down for sure, but that's just not bearing out in the numbers. Now, what many people will tell you is that, okay, what's going to happen when all of these renewals start happening, right? The renewal shock. Everyone that originated mortgages in 2020, 2021, sub 2% rates, they're now going to have to renew at these higher rates. And that's going to be the time period where all of these people are going to have to make that decision to sell. Well, who else is affected when sales quantity is so much lower than the averages, other than the banks? And the banks who want your mortgage business. There was an article, I'll show it here, where RBC basically came out and said, look, there's a rate war going on out there to be able to acquire mortgage business, because the book of business of mortgages is so far down that the lenders are now fighting and battling for the business. And, oftentimes the rates that you see, sticker rates online when you search them, so far off how far the banks and the lenders are willing to go in order to earn your business. So this is going to be an interesting piece to watch, because as the Bank of Canada makes further cuts, and they did suggest that, that is a very likely scenario moving forward, provided the data keeps pointing that direction. As they make further cuts, if sales quantity remains low and these mortgage originations are much lower, these banks are really going to be battling for your business, and they're not going to want to post and advertise these ridiculously low rates. But just how far are they going to be willing to go to not only acquire you as a client, and this is an important thing as well, is if you're coming up for a renewal, anyone who's been in business for any amount of time, I've been in business for decades, and I can tell you that, the cost of acquisition of a new client is always higher than the cost of retention, than keeping a client. So you can bet these banks, these lenders really want to retain you as a client. This is not like in years past where quantity of sales were so high. In sales, we call it a funnel. The top of the funnel is always getting filled. There's all these mortgage originations. There's so much new business to be had. There's people reaching out, trying to get new mortgage originations. This is not that market. So your renewal as a mortgage holder is incredibly more valuable to your lender today than it has been in years past. And so what you need to do, my advice to you, is if you are going up for renewal, you have to make sure your lender knows that you are shopping around. You can't have them believe or think that, they're the only ones that are, going to offer your mortgage. They're the only ones you're looking at. You can save yourself thousands, and I should say tens of thousands of dollars in interest costs if your lender knows that you're being aggressive out there and you're going out there for the best deal. And so, yeah, people will say that, okay, this sticker shock and the renewals and what's going to happen, and people are going to have to let go of their properties. Of course, there is going to be some of that in the market, but I'll maintain what I've said before in the past, that people will cut back in every other area, every other non-essential area, non-essential spending, before they make that decision to, sell a principal residence, for instance, and move into a rental. That's really back against the wall type of scenario. I don't think we're going to see any sort of widespread scenarios like this. I think banks are going to do whatever they can to retain business. I think, they're going to want to hold on to their existing clients. It's going to get more aggressive out there, like the article that I just showed. So it's going to be a very interesting, I would say, next kind of 6 months. What they're suggesting from the Bank of Canada in terms of further rate cuts, likely a cut at every meeting through the rest of the year and into the next year. Knowing that, and let's say making that assumption, we don't know that, but making that assumption that rates will be lower, variable rates at least will be lower in the spring of next year. What's that going to mean for the real estate market when we get into that, typically busier market of the spring? We're now going to be in areas where, again, those rates are lower. People already are starting to think, do I go the variable route versus the fixed rate route right now? So people are, you wonder, are more people going to be shifting to this variable mindset, next year around this time for sure, but maybe even next year in the spring? What's going to happen with the inventory levels at that time? And again, we're just not seeing that correlation between very high inventory levels, low activity, and sale prices just dropping off a cliff. Things are maintaining. Detached segment, it's a very similar story where month over month, completely flat on the greater Vancouver side. There seems to be, what I'm observing out there is there are some price floors being set. There are many sellers still dictating what it's going to take for them to move off of a property. There are many sellers out there that, they don't have a plan that they have to enact for the next property. So it's not like there are backs up against the wall. You're hearing so many more stories of how Fewer people are downsizing now from their detached homes. They're staying in their homes longer. So, this ultimately is tying up that product for the young family to be able to upsize into that entry-level detached home. Not a ton out there available. And this is going to be a story, moving forward. And I talk a lot on this channel about that condo segment and how, these inventory levels, and yes, there are deals to be had out there, but you have to hunt for them. They're not just right in front of you. You really have to dig deep and figure out, who's selling, why they're selling, do they have a mortgage on it? Are they paying excessive mortgage costs? Are they with a B lender? All of these sort of things come in to determine, the motivation level of these sellers. While at the same time, you'll have sellers that are listing a vacant property, brand new property. It's been on the market for 6 months. They haven't adjusted their price at all. So across Lower Mainland, if you're unaware, there's some very deep pockets out there. There's some very deep pockets, very cash heavy, equity rich folks that have their money in this real estate. They don't want to go the rental route. So I think moving forward, I wonder now if we've seen a bit of a plateau again, another plateau, another flattening, before we see, another slight run up. It's not going to be pandemic level type run up. I think there's no chance of that. But, I would not be surprised at all if now we start to see over the next 6 months to 9 months, price growth across all segments. So there you have it, guys. Bit of a quicker video this week, but I hope you did enjoy it and you learned something. If you did, hit the like button, because what that does is it takes the video and it sends it out to more people so they can also learn from it. And if you enjoy weekly real estate content, subscribe to this channel so you don't miss next week's video. And lastly, again, if you're in Metro Vancouver or the Fraser Valley, you want to chat with me about your real estate situation, you can book me for a free call, or you can just give me a call, send me a text, shoot me an email, whatever's easiest for you. I'd be happy to chat with you, but I want to thank you again for watching this week's video, and I look forward to seeing you next week.